Hi, this is Ed Barsano. Today I'm going to talk about how to make money in this coronavirus stock market. The uniqueness of this market is unprecedented in our lifetime. And there's a lot of opportunities coming ahead, and I don't think most people are even looking at it. I've talked to a lot of people, and for instance, people in their 401ks, and they seem to be pretty content. And then there's a lot of support for being content because you see the stock market's going up over the last few weeks. You go, hey, everything's great. We're just going to go back to normal. Wow, are they in for a surprise? Okay, so let's get started. For one, I don't believe that the economy is going to recover as fast as we hope. Right now, the global cases approach 2 million, the global coronavirus cases. They've doubled in the last 2 weeks. And the vaccine isn't even expected for 12 to 18 months. I mean, think about it. I mean, they're talking about a recovery, but yet I don't see a recovery even in sight. I mean, I haven't even seen a slowdown yet. I've been monitoring these numbers now for a month, and I think it's pretty dire. I don't want to sound like Dr. Doom, even though somebody called me that not too long ago. But you know, it is what it is. Because going back to work is going to be a real challenge, and getting everyone back to work is going to be a real challenge, because you can't just go back to work. You can't just open up the floodgates. I know Trump wants to do that, and hey, we all want to do that. But the problem is, the minute you open up those floodgates, especially in the economic capital of the world, which is New York, those numbers are going to skyrocket. So how do you go back to work? It's a challenge. I would not want to be the president at this time. I think there's a lot of work to do to get this market going back. And this virus is not letting up. And this isn't just in our country, it's worldwide. So expecting a recovery overnight, because I've heard people say that, oh, you know, it's going to be a V shape. You know, it's going to go down, then it's going to go right back up. And it's like, no, no, it isn't. Companies have already reported really bad earnings. Today's the first day. I think it was JP Morgan reported a 70% drop in the first quarter, and they're talking about, they even said the next 2 quarters are going to be throwaways. It's like, whoa, wait a minute. And then Boeing, I heard they lost a contract today for 150 airplanes. I'm like, wow, wait a minute, that's $1 billion. So, you know, expecting this thing to go away overnight, this is different than every other crash we've experienced. So I just don't think there's going to be a recovery right away. Okay, number two, expect a much lower stock market. And this is something I've been looking at now since 2000, since I got hammered in that 2000 crash. In 2000, the Dow touched down at 7,500. In 2008 or 2009, that period, that crash, the housing crash, it touched down at, I think, 7,000. Now we're sky high. Sky high. And one thing about these last two crashes that went by from 2000 and 2009, in my opinion, they were man-made. Simply because in the 2000 crash, they said it was the dot-com crash. All right, so there was a lot of dot-com companies that might not have been profitable. Fine, slam them into the ground. But they certainly didn't need to slam Microsoft and Intel and every other company in the stock market. They didn't need to slam all the companies down into the ground for 2 years, but that's what they did. To me, that was a man-made crash. And then in 2008, it was the housing market crash. Why did we have to slam the entire market down? Again, another man-made crash. They could control that. And if you look at the volumes here, look at the volume over here under the 2000 crash, and look at the volume under the 2008 crash. Now look at all this. The high volume, this super high volume, all the way from 2000 and what is that? 17 to 2020. Look at all that. I mean, there's a lot of buying took place at ridiculous prices. Let me just say that, ridiculous prices. And I contend that this whole market is way too high. It's just crazy high. And I've been analyzing another thing that I want to talk about, and I don't have it on the slide here, but I've been looking at the 401k. Actually, I'll add it. I'll add it on I'll put it on in a few minutes. I think I'll add it to one of these other slides when I get done with this one. But right now, I really do expect the market to come up. I mean, we could get that Dow could touch down all the way down here like the other crashes. It really could, because I believe the institutions have been selling for these last since March. They've been dumping everything they own, and people I talk to out there all over, I ask them about their 401k, and everyone sounds very content. They're very happy where they're at. They're like, hey, nothing's wrong with my 401k. I'll ride out the storm. I'm like, okay, that's going to be a heck of a storm to ride out. And I asked another person just this morning, and I said, if you could take out your 401k money while you're working, and that's something you really can't do when you're when you're working, you have to wait until you retire or after you're 59 and a half. I asked him, how many people do you think would withdraw their 401k money if they could, if they were allowed to, without quitting their job? And you know what his answer was? He said, everybody. And like, whoa, that caught me off guard. I'm like, seriously? There's a lot of people sitting at home right now unemployed. I mean, think of the millions of people who are hourly employees. They're not salaried employees. So they don't have any money coming in. And I'm not knocking any trades, roofers, air conditioning, refrigeration. I mean, there's just I can't think of it, but there's a lot of jobs that are hourly. I had jobs where I was hourly years ago. Miniature Lamp Corporation, Stuart Warner. I mean, I was an hourly employee, and if I didn't work, I didn't get paid. And that's where we're at now. And the government thinks they can bail us all out, bail out a $20 trillion a year GDP. Well, they're going to have a lot of bailing out to do. And even someone said it today. I'm not sure who it was, J.P. Morgan possibly. Somebody said what I've been saying for the last few days is we're going to see the biggest crash, the biggest recession since 1930, since the 30s. Now, again, I don't want to sound like Dr. Doom, and I apologize if I do, but boy, I'll be honest, I can't find anything positive. I mean, I watch TV all day long. We're all trapped here in our houses. I'm watching Fox News and MSNBC and CNN, and they're all sounding so rosy. They're sounding, the way they're talking, it's like, oh yeah, we're all going to go right back to work. I'm like, really? Seriously? I mean, I'm thinking that there are a lot of people are not going to go back to work. I think there's a lot of jobs in those strip malls, a lot of businesses that are not going to reopen. They're just going to say, you know what, I was barely making ends meet before. I'm not going back. And if I have a chance to get out of this right now, I'm just not going to go back. I think there's going to be a lot of open spaces in those strip malls. So let's go ahead on to the next screen. On this screen, we're going to talk about the unemployment numbers. And before this hit, before the coronavirus, we had these record numbers. They were so low. It was all so nice. 3.5% unemployment. But now they're predicting by June, a 15% unemployment. So I ran some numbers here. Simple math. At 4% unemployment, that's 14 million people unemployed. Okay, well, I think they've already got, just right out of the gate, like 6 or 8 million, what is that called? Unemployment, people applying for unemployment, right out of the gate. We haven't even started yet in this recession, or in the market slowdown, and already, 8 million people have already applied for unemployment, and that doesn't even count the millions of people who haven't even applied. And so there's going to be a lot of unemployment. So that's at 4%. At 15% unemployment, which they're predicting by June, that's 52 million people unemployed. And I've heard a lot of people, not a lot, but I've heard some analysts on TV saying they expect that number to even be double. Well, at 30% unemployment, that's 105 million people unemployed. I mean, come on, man, that's 1/3 of the country unemployed. And, again, I apologize if I sound like Dr. Doom, but when you got numbers, when you got that many people unemployed, and, in Boeing, like I said before, lost 150 airplane, 150 jets, canceled. I believe this entire market is being held up. I'll tell you, I just think the whole thing is being held up. I think the large institutions are dumping everything they own. And let's talk about it. Let's go to the next screen and that I just added, and we'll talk about the 401ks. Okay, so I just added number 4. Why is the market going higher in April? Seriously, in April, while all those coronavirus numbers are skyrocketing all over the world, we got a stock market that's going higher just because people on TV are going, yeah, we're really starting to put together the plan for how to go back to work. Oh, well, then that ought to push the Dow up to 30,000. And so this is the research that I did. Very simple research. You could Google it yourself. It says by law, the 401k managers have to deposit an employee contribution within 15 days after the month it's deducted from a paycheck. So on March 31st, the 401k money, people got paid and their contribution to the 401k went in. So the fund managers have until the 14th or 15th, till April 15th, to get that money in. And lo and behold, what do we have? What ends up happening? The stock prices start going up. The Dow is up every day, all last week, every day. And it's like, I'm like, I've been doing this robotic trading now for years. And I never really thought about, when is the 401k money going in? And now that I'm looking at it closely, I've come to the understanding here, or the realization, that that's a fixed number almost. They know how much money is going to be poured into the market every month, every pay period, every month. When that money goes into the 401k, they know how much that is. If you look at the number and study it month over month over month, you can see how much buying takes place each day after at the beginning of the month. So if you look at it, you can almost calculate by today, which was the 14th, how much money is still left to be put in. Because you can calculate how much money was put in the first 13 days, and you could say, wow, there's a lot of money left over that's still on its way into the market. Because I've talked to people, and the only people that have been going to cash, and I've been telling everybody I know, man, I'm like, you know what, if it was me, I mean, I told the guy today, I went and got an x-ray on my right foot because I hurt my foot a couple days ago, and I don't think I broke it, by the way, but it does hurt. Anyways, I went and got an x-ray, and I asked the x-ray technician, I said, are you in a 401k? He goes, yeah. I said, are you, have you changed your plan? Did you go to cash, or are you leaving it all in stocks? He said, no, I haven't thought about it. I haven't done anything. I'm like, really? And that's the kind of answer I get across the board. So you got all this money that's going to pour in. So what happens now today, which is tomorrow's the last day? It's got to be in by tomorrow. So what do? They spike the market up as high as they possibly can. I mean, I even saw Tesla, who says we're laying off and everything. Their stock was up $85 a share. It's insanity, man. We got companies that are going to report zero earnings and their stocks flying. I mean, I believe that this is what I said right here. The stock prices are held up while new 401k money flows into the market. I sincerely believe that. And I believe we can expect a large market decline to start in the last half of April or maybe next month. I don't know. But it's crazy, man. These companies, I mean, they're going to report terrible earnings for the first quarter, and they're already saying the next 2 quarters are throwaways, meaning there's not going to be any income. It's like, give me a break. How do you, I mean, company, whatever happened to the days when a company missed earnings by a penny and the stock plunged because they didn't make earnings? Or how about the companies who made earnings but then didn't give good guidance, and it didn't sound like their next quarter was going to be as good, and then they get slammed? I mean, now you got companies saying, hey, I didn't make anything last quarter, and I don't plan on making anything for the next 2 quarters. Get real. And their stock's going up instead of down. It's like, no, this is wrong, man. There's something wrong here. And millions of people are still in the market. I'm like, go to cash. As a minimum, go to cash. I mean, we'll talk about that, but this is insanity, man. To me, we hear all this propaganda, we hear all the lies, you hear Trump saying the lying press and all that stuff. And it's like, but when I'm looking at the stock market, that's all I hear is lies on TV. I can't make a single ounce, I cannot see an ounce of honesty. I just don't believe it. I believe the institutions are dumping every single share they own because it's a no-brainer, man. We're going down. And it's good. It's a great opportunity. I mean, we missed it. I missed it in the 2000 crash because I got hammered. In that one, I was completely unprepared. And in the next crash, I was completely protected, which was really great, but I didn't really take advantage of that crash because I just wasn't. I mean, I knew to be out. I knew it wasn't going to go. I knew the crash was coming and it was bad, but I didn't. And I was protected well enough, and that's good. But really, I'm ready for this one. This one's going to be. And again, I don't want to gloat. I don't want to sound like I'm happy about all this stuff. I mean, I'm going around out there, I go shopping, and buy groceries, and I bundle up. I got a mask on, I got gloves on, I got a hood on. I mean, I went to the bank today and I felt like I was ready to rob the place. I walk in with a mask and everything. It's like, this is crazy. And I see a lot of people not wearing masks or gloves, and it's like, hey, I guess whatever floats your boat, I guess. But I just, right now that the virus is still spreading, I just don't see why you wouldn't just wear it. And then for me, it's not just about me protecting myself. I have my son here who had that one incident where he got paralyzed from his waist down in January. He's starting to walk now. He's got a cane and he's actually walking. And that could happen to anybody. I could do a whole video on that alone. It caught us completely off guard. And then, man, do you believe it? A month ago, my wife broke her leg. She slipped and actually broke her ankle, right above her ankle. And so I'm the only one walking in the house. Do you believe this? And so, but I've been going out to the stores every few days and bringing in sustenance, food, paper towels, that kind of stuff. And I think a lot of people are not taking this whole thing very seriously, and I think we are getting ready for the mother of all crashes. And everyone seems to be, remarkably calm about it. It's freaking me out, man, because I'm going nuts, and everyone else seems to be fine. They're like, yeah, no problem. I'm like, no, this is the only real crash we've experienced in our life. The other ones were man-made. Anyways, let's move on. So let's talk about it. Let's talk about solutions for preserving our wealth during the coronavirus economy here that we're in. And it's not rocket science. It's not that hard. And I say close all stocks, close all positions, And we're running these robotic traders, and I've learned a real lot, that. I love to share it, and I'm going to. But right now, I think now's the time to just go to cash. That's solution number one, is outright. Just simply go to cash. You can do that even now. You can call your 401k manager and say, move me to cash. And that's it. Close my positions and just put me in the money market. Just leave me in cash. And then, and when you do that, you're protected. I mean, we're not here to gamble, man. I was watching gambling on TV just last night, these poker players. I'm like, man, they're going all in with $1 million, and I'm like, no way. I mean, guy's got a pair of nines, he's betting $400,000. I don't get it. Fine, that's gambling, but you know what? You work too hard, and life is too short to be gambling with your life savings. And right now, with the economy the way it is, and what's right around the corner, as far as, I mean, there's nothing that can hold that market up. That's what's killing me, is this is a no-brainer, and so it's too simple. Just absolutely too simple. When I sent the email out to many of you, if not all of you, last January, that was even before the coronavirus, before we were even thinking about the coronavirus. It was just that at 3.5% unemployment, I felt that if everyone is working who wants to work, and so how are the companies going to expand? The way they expand, the way Starbucks expands, is they open up more stores and hire more people. These companies hire more people. Well, if they don't have any people to hire, how are they going to expand? And therefore, why would their stock price, what is the justification for the stock price to even go higher? So I couldn't see it. And I was saying, so are we looking at, is the Dow going to go to 60,000? I mean, at 30,000 or 29,000, it's like, this thing has nowhere to go but down, is how I felt. So, and I've never done that. And many of you know me for at least 15 years. And since I released the software to the public in 2005, and I've never said get out of the market, just outright get out. But it was a no-brainer. It needed it. I couldn't hold back. And so I sent everyone email and said, you know what? I would get out. Go to cash right now, man. There's something going on. I don't like this. The market is way too high. And there's no way these companies can sustain those kind of earnings and then increase the earnings. So that was in January. And that was before the coronavirus peaked the way it has now. And so with the coronavirus, that just clinches it, man. This coronavirus is just, I don't want to call it icing on the cake, but it sealed the fate of the stock market. I mean, the stock market was too high already. And with the coronavirus, it's just, that's it. I can't see a single thing that's going to keep this market up. And the fact that we're only down 7%, 7 stinking percent from the all-time high, no way. We should be down 30% from the high minimum, and I believe we could easily be 50% or more. So we're looking at a serious drop. You're going to have lots of opportunities to get back in the market. There's really no reason to be sitting in here and taking that gamble. I mean, the upside potential is very little, but the downside risk is off the map. This is not a time to be sitting back and relaxing and thinking everything's okay. And we all know everything's not okay. You don't shut down the entire world and then think that the stock market's okay. No way. Okay, so I'll go ahead and let's talk about another possible solution. Okay, here's my second solution. Close all your stock positions and trade only one stock, silver, SLV. Silver isn't going anywhere. Unlike company stocks that can fail, business problems, when the economy crashes or when the market crashes, they bring down all the company stocks. And silver, gold, oil, these commodities they're called. These things, this is where people go for safety after they bail out of the stock market. So when the market first crashes, of course silver is going to go down because everything is going to go down at that instant in time. But then, you know, where do you put your money? If you're not going to put it in a money market and get 1% or less a year, and you're not going to put it in stocks, where are you going to go with it? Gold, silver, oil. And oh yeah, let me say something about oil. You know, Saudi Arabia and the Soviet Union got together to cut oil. I mean, let's get real. The reason they're cutting oil is because all their coffers are full. Their barrels are full, their ships are full. They really don't have anywhere to put the oil. They're already, you know, we don't need any more oil. I mean, there's so much oil out there right now that everybody has stopped drilling. I mean, what are you going to do? Where can you put it? I mean, personally, you know, my car was on empty for a month and it's been sitting, and then I went and drove yesterday and I filled the tank. When am I going to have to fill my tank again? Maybe a month from now or even longer? So I mean, that's the reason oil is that's the reason they're cutting oil. You know, it has nothing to, I don't think it has anything to do with trying to raise prices and that kind of stuff. I mean, the fact is they have nowhere to put the oil. So anyways, back to silver. I'm going to do a whole presentation on silver, but what I really like about silver, as far as like what we've learned with our robotic traders over the years, and we all learned together since 2005 when I released the robotic trader to the public. You know, one of the things we've discovered is, and everyone's doing it, and they want to have a lot of stocks, and that's really a problem. What we've discovered is if you're trading a bunch of stocks, then you really can't trade a lot of shares in any stock because you have a bunch of stocks. I mean, somebody with a $10,000 account wants to trade 15 symbols. I mean, how many shares can you buy if you're going to trade 15 different stocks? But if you only trade one symbol, like silver, you can trade 500 share lots, 1,000 share lots. It's only a $14 stock. So we can afford to trade in much higher volume. So people that I've been helping with their auto traders, we base the number of shares on the amount of money that they have in the account. So we start this strategy out with 100 shares, and then we go to tab 2 of the watch list, and we take a look and say, okay, if we were trading 100 share lots of silver, how much money would I need to trade up to 1,000 shares? And it shows on the screen on tab 2 how much funds you would need to trade it. And say it says you would need $9,000. Okay, well, if I have a $30,000 account, then I can say, oh, well, then let me triple that. So I'll trade 300 share lots. Then if I go back and look, it says, oh, look, you need 36,000. 3 times 9 is 36. So that's how we can tell. I mean, there are people out there trading 1,500 share lots. And what's nice there, when silver goes up even 50 cents, that's $750. If you're doing 500 share lots and it goes up 50 cents, that's $250. And, you know, it's a lot better than trading a bunch of stocks. And the risk on stocks right now is just crazy. I mean, you know, like I said before, you know, you have very little upside potential, but unlimited downside risk. So I say just trade silver, one symbol. I feel safe. It's at the bottom already, and I'll go over when, you know, as far as talking about silver, I'm gonna create another video. Actually, I'll probably just add it to this one here. I'll extend this presentation, and we'll go into why trade silver. So actually, why don't we go ahead and just get started and do that right now? Okay, let's talk about why trade silver. And when I say trading silver, I mean trading the stock symbol SLV as opposed to trading physical silver. When I say physical silver, I'm talking about buying physical coins, buying or bars. I think they call it bullion. Buying coins and putting it in your safe and sitting on it. And of course, if you do that, you miss all the trading opportunities because silver moves, you know, a lot and up and down almost every day. And, you know, so we're going to talk about the benefits of actually physically trading silver, not physical silver again, but actually trading the SLV symbol in the stock market. And I'll talk about the benefits of trading silver versus buying and holding a bunch of coins, or the benefits of trading silver versus trading other stocks, company stocks. There's a lot of risk in trading company stocks. Anything can happen to a company, whereas silver, it's pretty resilient. I've been trading silver for 30 years, and over 40 years. So I shouldn't say I've been trading silver. I haven't been trading silver for 40 years, but I've been watching silver since 82, when I used to buy coins. And we can talk more about that as we go. But I bought coins of silver, and then what it took to actually to trade physical silver that way versus the stock symbol SLV. And SLV hasn't dropped, like I've never seen it below $10 in 40 years. So let's go ahead and get started. So for starters, number one, the demand for silver is not going away. You're always going to need silver. It's not like a company, where a company can have financial problems and their stock can plunge. Silver is going to be around forever. And just some of the examples of where it's needed, and the list goes on and on. I didn't want to fill up screens with examples, but I mean, it's in our DVD. Just you need it for, it says a fine layer of silver or gold on a DVD helps to prolong its life. 3D printing, it says up to 20 million ounces of silver per year can be used. It says here by 2018, so that's an old screen, old picture. Batteries, there's billions of batteries out there. They need silver. The ball bearings on engines are coated with silver. And I mean, silver is just going to be around forever. So we don't have to. It's not like another company where you have to worry about, is it going to go away? And in 40 years since I've been looking at silver, since around 1982, I've never seen silver below $10 a share. And right now it's at 14. Literally a couple weeks ago, or maybe it was only a week ago, it went down to 11. And then instantly the next day it was back up at 12, then 13, and now it's back at 14. So I'm not worried about silver going away, as opposed to many other companies can crash. Their stock can really go down a lot. In my opinion, silver is already pretty far down there. So let's move on. So number two, the price of silver. It's under $15 a share. A few years ago, I think it was like 5 years ago, it was all the way up to $55 a share. And that's, of course, when the market was a lot lower, so it obviously could go back there if the stock prices plunge. Or I should say, when the stock prices of all these other companies plunge, a lot of money is going to go into silver. And you can purchase a lot more shares of silver versus stocks of companies that are way overpriced. Right now, so many of the companies are just, they're at their all-time highs, or they're 7% from their highs, and it's just ridiculous. Whereas silver, it's already near its all-time low, and and you can buy so many more shares of a low-price stock. I mean, you could be, instead of trading in 100 share lots of an expensive stock, a lot of times people say, gold or silver. Well, gold is 10 times as much as silver. It's just way too high. So you don't get as many shares. And in the robotic trading space, it's nice to be able to buy stock, to buy a lot of shares, and then be able to just sell it on very small movements. So and make $500 or $200, instead of $22. If you buy an expensive stock and you don't have a lot of shares, it's got to go up too much. And silver is nice and low, so there's a lot less risk, I should say, for a low price stock. And if you're only trading one stock, you can buy a lot more shares. And that's what it's all about. For us veterans who have been robotic trading for 15 or 20 years, we know the name of the game is turning inventory. And if you can turn inventory on a low price stock, that moves a lot. That's where it's at. So silver, I can say, is gold to an auto trader. So number 3, it's in a nice consistent 5-year range. I mean, this is what I'm talking about, is gold to an auto trader. Between $12 and $18 in the last 5 years. I mean, that's beautiful. I mean, it dipped just a little below 12 a few days ago, and it came right back, and we're right back where we were. I mean, this is beautiful. Look at all that trading. A nice 5-year range. I don't have to worry about, buying a stock that's already at its all-time high. I mean, like Microsoft's 5-year range is from $50 to $180. It's just ridiculous. And then if you jump in now, you're going to be jumping in at a sky-high price, and you have so much downside risk. Whereas, look at this. This is, I mean, when you're talking about robotic trading, this is beautiful to be able to find a stock that's not really a company and is more of a just spot silver. I mean, that's, you can't beat that. And after doing robotic trading since 2000, I can tell you this is really where it's at. Being able to just trade, give me a stock that just sits in a range, and especially a nice range. This is a beautiful range. I mean, a $6 window, and I can trade that thing forever. I mean, that's beautiful. And number 4, SLV, that symbol moves between 1 and 3% per day. I mean, that's, again, we're talking beautiful. And this is what it says. It enables you to trade, buy and sell on small stock price moves and lock in profits quicker and consistently. When I trade this stock, based on the amount of money that is in the account, I help a lot of people set up their traders for this, and depending on how much money they have, if they're only trading one stock, I mean, they could be trading 300 share lots, 500 share lots. I know someone trading in 1,500 share lots. I know a few people trading in 700 share lots. And, we add on 3% drops, and we take 2% profit. So a 2% bounce back, and we're selling. And just locking in whatever money it is, whatever money's there. And just consistently, in, out, in, out. And again, it's hard to get a stock to move 1% to 3% a day for years. And, sure, the market's very volatile now. We're seeing crazy moves in these stock prices, but that's not consistent. And you don't know. You get a big move in a stock, and it's, I don't want to be in a stock that drops 10% overnight. And a lot of companies are doing that. And, whereas silver, it's nice and consistent. A 1 to 3% move per day, and just allows me to lock in profits either every day or maybe every other day. Every few days, you're taking money off the table. And those of you who have been running robotic traders for a long time, sometimes you can go weeks when you're trading other companies waiting for them to make a move, and a big enough move. And then what are you making? $30 on a trade? It's like, forget it. A nice low price stock that trades in a range and moves 1 to 3% a day. Again, I can't say it enough. Silver is gold to an auto trader. And number 5, high liquidity. SLV averages about 25 million shares per day. So, even if I'm trading in 1,000 share lots, it's a drop in the bucket. And the fact that it even trades for a stock that's only at $14 a share that trades 25 million shares a day, that tells me other people are doing the same thing. They're playing the volatility. And, basically you're turning inventory, and that's the way you make money in the stock market. You trade a very high volume stock, and you trade it a lot as it moves around. And if you can get a stock that moves 1 to 3% a day, it's in a nice range, between $12 and $18 over the last 5 years. It moves 1 to 3% a day and trades 25 million shares a day. I don't have to worry about being locked out where I can't get filled. You know, that's beautiful. I mean, lots of benefits to trading silver. So let's move. So now let's change the topic a little bit and talk about why to not buy and hold physical silver. Or the question is, why not buy and hold physical silver? Well, as I've written here, trading SLV with the robotic trader autonomously with TD Ameritrade is fully automated. It buys and sells instantly with no price haggling, no trading fees for online trades if you're trading through TD Ameritrade. I mean, you can simulate it for a while and just see, you know, it's beautiful. You're robotically trading, you're doing it instantly, and no trading fees. I mean, it's the best of all worlds. But there's a lot more reasons why not to just buy and hold. You know, much better to actually trade the stock instead of buying it and just holding it and waiting for it to go to some new high. Okay, one of the worst things about buying physical silver is you cannot turn over physical silver as fast as online trading. I mean, if you're sitting there and you got your coins at home or you have them in a safe, how do you trade them? I mean, buying and selling and shipping them and storing them, I mean, it's just a hassle. I mean, I held silver. Like I said, I started trading silver in I think 82, and I bought about a dozen of those coins, or maybe a little bit less. You know, the silver bullion, you know, the 1 ounce coins. And then one time I was in a coin store and I saw that he had the coins, and I said, "Hey, I got a bunch of those at home. What would you give me for them?" And the guy in the coin store said, "Oh, I have enough. I don't need any more." I'm like, whoa, wait a minute, what? If they're not willing to buy them from me, you know, I mean, I don't want to haggle with somebody, you know. And then, you know, and I'm like, hey, but I try to tell the guy, you know, it's like, hey, I don't want to buy more of these if I can't sell them. And he goes, well, all right, I could buy them back for $1 below the current price because I have to store them. And he started giving me that whole song and dance about how he's got to store them and wait for somebody to buy them. And I'm like, you know what? I don't want to play that. Like I showed you in the last slide, I can buy and sell silver stock, you know, the shares, sell shares. I mean, you can't walk into a coin store and say, I want 700 ounces of silver, you know, and then 15 minutes later sell it back to them for 2% profit. I mean, that's not going to happen. But yet, that happens all the time online. So, buy and hold is dead. Buying and holding silver, millions of people are doing it. I see the commercials on TV. I almost want to die every time I see the commercial. I buy my silver from Roslyn, I think Roslyn Securities or something like that. It's like, what? You buy and hold silver? You're just sitting on it? Waiting for what? You waiting for silver to go to some new high? What, are you going to be on this planet for 200 years? I'm going to just, hey man, robotic trading is all about turning inventory and making the money and moving on, not storing things, you know, storing collectibles and sitting on it. I mean, when I was a kid, sure, it was fun playing with coins. You know, it was nice to have that 1898 silver dollar. You know, it's kind of cool. 1923 silver dollar. Oh, wow, that's cool. But hey, if I'm in this for the money, I don't want to be hanging around holding silver. I just want to trade it. And finally, you know, the last thing, and it's basically what I was just saying, many local dealers won't even purchase large quantities, like 1,000 ounces. They're not going to let you just, you know, all right, I want to buy 1,000 ounces all the time, you know, and they want to add fees, and you're going to be paying, I mean, I don't even know, are they going to charge you tax? and then when you go to sell it back, it's just, to me, again, big hassle. So that's the reasons, that's what I like about silver. I think it's not going anywhere. It's very, the trading silver versus buy and hold. It's liquid. I'm in, I'm out. I mean, I can trade silver. I mean, trading silver. I know people that are trading silver. Lots of people that that I've helped set up their robotic traders. Um, they're making money every day or every other day. They're taking profits off the table. And it's not like when, again, like you're sitting on a whole bunch of stocks, different companies, and you're making $22 on a trade. I mean, because you're only trading one stock and you have a lot of shares. I mean, you could be taking $2, $3, $4, $500 a day off the table in profits. It's the perfect thing. Um, Again, I've been using these robotic traders since I started developing them in 2000. I learned a real lot in the process over the years, just tons. And this is the culmination of a robotic trader. This is the way to do it. And I love silver. The price is right. It's at a nice prime, a nice beautiful low price. The market's getting ready to give us the mother of all crashes, and silver could really take off. And I don't care if it takes off. I'm happy if it just sits in that 5-year window between $12 and $18 a share. I'm content with that. Just stay right where you're at. I love it. And just give me that 1 to 3% move daily. Okay, finally, I need to talk about the disclaimer. I'm not a stockbroker. Many of you already know me. Some of you know me for over 15 years since I released the software, robotic software, to the public in 2005. You know I'm not a stockbroker. I'm not an investment advisor, but I've presented all over the country, plus Canada. I mean, I've presented in Florida a dozen times, Atlanta, Georgia, all over Texas, all over California, Washington State, Arizona, Nevada. I mean, I've pretty much presented all over this country. New York, Jersey. But I'm not a stockbroker. I have to give you a disclaimer. I am just a software developer that creates robotic trading software. And so I'm going to read the disclaimer. For demonstration, I have to say this is for demonstration purposes only. BP Technology, who is the owner of Pajama Trade, which owns Cool Trade now, does not make buy, sell, or hold recommendations. Unique experiences and past performances do not guarantee future results. You should speak with your CPA or financial representative to ensure that the buying and or selling of silver is suitable for your investment profile. All suggestions given hereto is intended for simulation mode only. I say run it in your simulator. Trade silver in your simulator with the amount of money that you plan to actually use when you go live, and watch what it does. Watch the money it takes off the table every few days. And much better than trading stocks. You're gonna like it. And what I always say is silver is gold to an auto trader. Trading silver is like gold to an auto trader because it's really, you're only trading one symbol. It's a great stock, and it's, as far as it's in a range, the price is nice and low. I mean, there's so many benefits, and I don't have to worry about silver going away. I've never seen it really go down, but I've never seen it below 10. I've seen it as high as 55 though, so that's cool. So instead of trading stocks and making $22 on a trade because I'm in so many stocks, or you would have maybe not only too many stocks, but the prices are sky high now. You have a lot of risk there. So anyways, let's just continue on. I'm going to go ahead and keep reading the disclaimer. The income projections, if any, or strategy ideas contained in this presentation are for illustration purposes only and are not warranties by BP Technologies, its associate, or presenter, that's me, in regards to how much money you will earn on your particular level of success, or your particular level of success. Like I said, run it in simulator for a while, go live when you feel like it. The expressed views, opinions, and concepts of the presenters are just that, opinions. Interested parties should conduct their own due diligence prior to engaging in the services and/or strategies exhibited. BP Technologies, its associates, agents, and employees do not provide legal or financial advice and do not provide any tax advice. Please consult your attorney or tax advisor. And by the way, I do not work for BP Technologies. I'm the creator of the Cool Trade software. They've given me an opportunity to write a video to talk about robotically trading silver, and so I'm doing it free of charge. I'm not being paid for this. I'm not being compensated in any way. Of course, I created the Robotic Traders all the way back in 2005. For everybody, so we could all work together. Really to conquer the stock market instead of going it alone. Millions of people are going it alone out there, and it's really tough. It's really tough to trade the market. You got to work together. We share ideas. It's been a wonderful experience for me, working with so many to create the software and get it right and get good strategies out there for everyone. And this here is where I feel like we're going. So I hope this helped. Anyways, there's my disclaimer, and thank you very much. So I want to thank you for listening to the presentation. I hope it was helpful and insightful, and I hope you follow my advice. I talked to somebody. I told them you remember I sent email to everyone, or well, to a lot of you. In January, I suggested getting out of the market while the Dow was over 29,000, and since then it's come down quite a bit. Some people listened, some people didn't. I'm not an expert, but like I said, I just can't find anything positive about where this market is headed over the next, I don't know, 6 months. I mean, to me, it looks like we're going to go down, and we're going to go down hard. So best of luck. God bless you guys. I hope you stay safe. Wear your mask, wear your gloves, and the whole social distancing thing. What I say is I'm trapped in paradise. Sitting at home. Of course, I'm a programmer. I love sitting at home anyways. So the whole thing hasn't affected me much. So I wish you all the best of luck. Bye-bye.